Well, let's now get more of the day's market movements. Adam Dawes from Shaw & Partners joins us now live. Adam, great to have you on the program. Look, we're pointing to the red, to the downside this morning again after what was a pretty shocking session in the US and a shocking one here locally as well.
Well, look, there's a lot of shocking in that. I don't think it's too shocking to have a little bit of a rest, a little bit of a pullback in our market. It's exactly what we sort of needed. So, yes, it's unnerving for investors to see red on the screen and see these down days. But we all know markets can't continue to go higher consistently. And even if they do, then we even have a worse unwinding or even a worse crash. So a little bit of a pullback, some support levels are starting to get tested again. I think it's really good for our market to see these kinds of pause on the wave to continue to go higher.
So what type of mindset do you need to get yourself in during these pullbacks then, Adam? Do you take cash off the table? Do you look for kind of defensive plays? Where do you start?
Yeah, it's a tough one. Obviously, we like clients to have around about 10% of their portfolio in cash at any time. So that then does leave us a little bit of room for us to be able to purchase some stocks or be able to take care of some opportunities. The second thing is that I always use the analogy, you always should pull out the weeds but let the flowers grow. So in other words, get rid of some of those stocks that are in the portfolio that haven't done well, that are small holdings. Get rid of the weeds out of the portfolio so that you can provide some more cash, either to top up some good quality stocks or look for some better stocks going forward. And I guess thirdly is that understanding that markets do move around and they are volatile, but keeping a cool head, don't panic in these environments.
Well, let's have a look at some of those stocks that do look good, even in pullbacks. BlueScope still is one on your list. Tell us why.
Yeah, so I've got a shopping list of stocks that I really like and want to buy when there's certainly these pullbacks. And we've certainly seen BlueScope still fire and do very, very well. But there's a lot of talk about Chinese and basically their effects on steel production. And they're curbing that steel production due to the fact that they need to clean the skies, or some environmental issues there as well. So what we've done is we're looking at BlueScope as a positive for that. The other side of it is you've got to be a little bit careful with all of the property and the Evergrande sort of scenarios that are going on. But any sort of lower steel production in China is positive for BlueScope. We think that the hot rolled coil North American steel price has fallen a fair bit. It will continue to fall a little bit more, but I think this one over the next 2 to 3 years is going to be a fantastic earnings per share growth story for the market. And I think this one is good on any pullback.
What about considering some of those blue chip miners for the portfolio during these type of sessions, Adam?
Yeah, well, remember, I hope everybody remembers in March 2020 when we had the COVID sort of crash or fall in our market. And it's basically, when we get these things, is you don't need to be a hero. All you need to do is look at some good quality stocks and then look to buy them at some sort of depressed prices. And certainly one of those ones is BHP. BHP has obviously come back from sort of $54 back down to sort of $38, $40 where it is today. It will get hit again as well. But certainly BHP is looking very, very good because they're trying to make themselves less reliant on iron ore. And one of the big projects they've got is the Jansen Potash project. That's going to produce a fair bit of potash, I think 4.5 million tons of potash in the first coming couple of years, and then that will be something that you can move forward with as well. So yeah, iron ore is a big part of their business, but again, potash I think is one of those thematics that will feed the world. That's those kind of things. But also, don't be a hero. Look for these good quality stocks. They've fallen. Now's the time to start looking at these ones a little bit more seriously.
What about a bit more of a defensive play?
Yeah, well, there's lots of defensive plays out there, but certainly something like a Wesfarmers. Wesfarmers has pulled back around about sort of 10%. That one is actually starting to look a little bit better from my liking. And just remember that also Wesfarmers is paying a $2 capital return back to shareholders. That has to get approved at their AGM, which will be next month. So again, there's another purpose for you to get into these kinds of stocks. Now, Officeworks has been doing very well. Bunnings has pulled off a little bit, and we just saw another bid for API come through today, so there's going to be a bit of a tussle for that. But Wesfarmers is one of those conglomerates that absolutely knows what they're doing. They're very, very good, and I just like this sort of pullback. I'd like to see the stock start to move a little bit further sideways before you start dipping your toe in. But I think this one, if any weakness today, would probably look as a good investment going forward.
Hey Adam, I'd love, before you go, your thoughts on the energy space. It was the only sector in the green yesterday. Of course, oil prices, gas prices in focus. Would that be on your shopping list?
Yeah, look, it is. There's a couple of things that you need to be mindful of the energy sector. One is, and we've talked about it a fair bit on the show, is ESG. The wall of money that's coming down the line, you need to be very, very careful of. And the reason for ESG is that a lot of projects have been mothballed because basically they don't think it's viable. Now, with oil price ticking over sort of $70, $75, the gas shortage potentially that's going to happen in Europe, I think the energy sector is a very good place to start. Then you need to look at the individual stocks, and obviously Woodside would probably be a better pick in there. Origin as well. I don't really like AGL. There's lots of issues going on inside of the company at the moment, but certainly that energy sector. And the other side of it is that demand is still high, but supply isn't following. And that's why we like the energy sector, because in the next 2 to 3 years, there's not a lot of projects coming online. And so that that lack of supply that's coming through with the demand that's still coming in, I think the energy sector is a good play for, you could say even defensiveness at the moment, but it is a good play to look at, certainly the Origins and the Woodsides of the world.
Adam, sounds great. Thanks so much for joining us this morning.
Thanks. Have a great day.
You too.